Hey team, can everyone hear me? Just type a one if you can hear me in the chat. We'll start the meeting soon, but just need to make sure the audio is okay and everyone can hear me. Just type a one in the chat if you can hear me. Awesome. All right, we'll just wait a little while. Uh, let a couple of people join, and then we can start the meeting. It is a tricky market, so this would be awesome. To actually discuss, and then got some additional announcements as well. Okay, welcome back, team. So again, we have just concluded the competition just over a week ago right now. All right. Glad all of you, glad many of you in this conversation here joined the competition. It really was, an interesting insight into uh, how everyone trades. And as I told many of you on the calls, I would say that what's interesting is the stats, even if you don't think look positive, actually do show a general overall outperformance over what I see in terms of other retail stats. So you guys are definitely above, uh, quite far above the average retail guy that we see. All right, but trading, as with all things, requires consistency and progress, and we all get better with time. All right. Right now, of course, I think the key challenges we have in the market are uh, we do have a rather volatile market that seems to want to go down. All right, but is not doing a very good job at it. And in terms of the main reason, uh, although Moonshot and a lot of the Chinese AI systems are getting the front and center news with regards to why the market is actually starting to come off, I would say that is probably not the main reason why we are seeing, the choppiness we're seeing in the market. I think it has a lot more to do with yields, the market. Having said that, also some commentary in terms of Bitcoin. It's down slightly on the news of the escalations in Iran, but nothing to worry about just at this point in time. I would say not just yet. All right, but we're going to cover a couple of things. So just before I dive into the broader market picture, um, I do want to remind you guys, if you haven't responded, we do have a meetup coming 4:30 p.m. on Friday. It's in Discord, and I believe also we probably put it in Telegram as well. So if you took part in the competition, definitely do meet up. Would be great to have you guys in person. The address will be given to you shortly. So do sign up if you have an interest. And then we'll also, it's a free and easy session. And, you guys can just, it's just a night to hang out, have fun. And of course, if you want to talk about anything trading related or something else, we can do that as well. All right. So it's going to be a really awesome event, fun event. So do let us know if you are coming to the meetup. It's both in the Telegram as well as Discord. Also, just a reminder as well for two other things. If you, we've sent you guys an email with regards to becoming an affiliate with us. Please do the necessary steps to get that affiliate uh, uh, relationship set up. And then we'll also give you a discount code so which you can share with your friends with regards to trading as well. for us, we are very happy to make all of you affiliates. So do check the email as to how to get it done. It's done within your dashboard. If you're not very sure what we're talking about, do drop me a question later, either in Telegram or on Discord, and we will tell you how to get that done. Finally, also discount codes are expiring 31st July for those of you who haven't gotten on a challenge yet. So for those of you who took part in the competition, that 30% discount code is valid to the 31st of July. If you face any issues, again, do drop us a message or drop me a message on Telegram, and I will get to it as quickly as I can. Also, interesting note with regards to the competition. Everyone within the top, I would say within the top 4 or 5 within the competition, all had pods that they were trading with. So again, the Discord is set up for you guys to create those pods. Do sort of like collaborate with each other. There is a clear edge for those who collaborate with each other and trade with each other in terms of how they perform. Even if this competition's results didn't quite match your expectations, it could be many factors. It could be just the current market conditions did not suit your trading style, and that's it. All right. So we'll be having another competition soon on the 16th of August, and that will be announced to you shortly. All right. But without further ado and any further delay, let's get into the broader markets. So we have our ES, sort of consolidating really nicely. It seems to want to go lower, but it's not doing a very good job at it. All right. However, it is important to note that this, wedge line has broken. So any hopes for this breaking out at this point in time, I would say are currently off the table. There is a real possibility we visit this 7371 level before we push higher again. So the green sort of like scenario where we just break above 7650 is a lower probability scenario. So do prepare next week for this to sort of drift down towards the 7370 level. And again, really, because 48% of the S&P 500 is technology. And in terms of the NASDAQ, you can see here that this has sort of been driving towards that key support level, which we've been talking about for a couple of sessions now, a 28264 level. All right, as long as the NASDAQ is drifting down towards this level, it is going to be very difficult for the S&P 500 to actually regain ground. More likely than not, it will start to, continue to test this downside consolidation scenario. But let's see how, Monday opens. Again, don't take the Asian Open as the be-all and end-all. The Asian Open often reverses quite quickly by the time the New York session comes around. So don't take any reaction you see in the futures as this is probably going to be the sentiment for the day. All right. But bear in mind, whenever we've had these kind of like weak scenarios, we do tend to see for Monday and Tuesday, the market sort of like moving higher initially before fading off. All right. So it will move higher within the first hour or so. And then you'll see follow throughs getting very difficult. And then within an hour or two, you start to see the market stuffing and giving back all the gains. All right. So this is a very likely way that things are going to pan out even in the coming week for both the ES as well as the NASDAQ and as well as many stocks. All right. But there are some interesting small cap stocks that could be setting up for interesting short squeezes, which I will cover as well. All right. IWM. All right. One could argue that we have hit an interim top. All right. It's not really clear right now in terms of where this would go. But if you were to put a gun to my head, I would say that at this point in time, all right, I would expect this to continue to move down lower to around this area here. And then sort of like consolidate around here within this area here before we sort of get a resolution either to the upside or potentially to the downside. But I am expecting a consolidation somewhere in this zone here for the IWM. All right, and I'll get to why shortly as well. All right, so within this zone here, this entire blue zone here, I'm expecting some sort of move lower and consolidation into this area. And the reason for that is largely because of the way the US 10-year yields are moving. All right. As I said, okay, the 10-year yield has hit its target, but we are seeing a setup again, as you can see, for another breakout higher. All right. And this is the part which gets troubling. Again, high interest rates are bad for everybody. All right. Like there is no scenario under which higher interest rates are good. Unless you are someone who has plenty of fixed deposits. There is no scenario under which assets do well if interest rates continue to spike higher. So the real hope for this is that we see this consolidate to the upside here, downside, sort of like push up against the top here tightly and then start to break down. This is actually what you want to see. If we see this, then I would say the resolution on the NASDAQ as well as the ES for the coming week, as well as the IWM will look way better for everyone. All right. But in the meantime, because this is starting to set up, do expect that equities will demonstrate some sort of weakness in the interim. However, I do want to point out something with regards to SOXX. All right. We can see here a really nice head and shoulders pattern. All right. So if you go to SOXX, which is a semiconductor ETF that many people trade, there's a head and shoulders pattern. DRAM, head and shoulders pattern. Now, what I want you guys to note is this. It has broken the neckline down here. All right. And guess what? None of us are the only ones seeing this. However, if you do believe that the AI capex scenario is not coming to an end, and given where memory orders and shortages are, well past 2027, if I were an institution looking to cause a lot of pain, this is exactly how I would play this. What I would do is I'd work with the market makers, your Jane Streets and all. I'll say, hey guys, I want to buy and I want to buy large. All right. And I want to buy in size levels that are much lower than where things are right now. I need you guys to drive down the price and I'll be the guys to take you out of your position. So what the market makers do, all of them know that a lot of retail guys look for head and shoulders patterns. Why? Because everyone talks about them and how they always play out. So if I were a large hedge fund working together with a couple of friends in the market making space, this is a perfect setup for me to actually do this, where I get my friends to drive this a little bit lower, and then I sort of like start to squeeze around here. So I sort of do something like this, where everyone's going like, oh wow, look, this is going lower. But what I really am doing here is I would be accumulating, and then I would squeeze everyone to the upside. All right. For those of you who have been trading for some time, you would also know that this is a very common occurrence. Everyone says head and shoulders breaking down. Oh no, oh no, oh no. All right. And then suddenly the thing doesn't want to go lower. So I do watch this 4730 level on SOX on DRAM as well as and SOXX. Do watch this level here. All right. At the 485.42 level. So watch the semis into next week. All right. And watch for some sort of like pattern that looks like this, where it just doesn't want to go lower, squeezes a bit lower, fakes everyone out, sort of does a sideways thing like this, and then heads up. All right. This could very well be a pattern that plays out for the SOXX and DRAM space. And part of the reason for this is also because One, we have our US 10-year yields have already hit the upside target. So if this can come down, this and this are likely to play out. All right. Also, in terms of the oscillator front, okay, I just want to point out that in terms of the oscillators, all right, we don't have anything indicating that this is for the ES, things that are oversold, overbought, or on the daily time frame. So it could go either way. It could resolve anyway. But on the ES 4-hour time frame, all right, we can see that the stochastic is already in oversold territory, and the RSI has a reading of 33.33. All right, sorry, not 33, 27.85, which is below 30, which most people consider oversold levels. I consider oversold at 20, but at these levels, the probability of a move higher is significantly more than 50%. All right. If this gets below 20, all right, on the 4-hourly, and you start to see this daily stochastic, the RSI doesn't have to go there, but on the ES, go towards the daily oversold level on the stochastic, do expect a significant bounce or move higher of some sort on the ES, led by the semis as well as the memory chip stocks. All right. Now, if we look at the NASDAQ, all right, the NASDAQ already has that occurrence right now. So I know everyone is saying like, oh, this market's going to be really bearish. But look, it's already having this occurrence here. The stochastic is actually moving to the oversold side. All right. If we look at, in terms of the RSI and stochastic on the 4-hourly, it has actually touched oversold territory on both. So if you ask me whether I think shorting is a good idea right now, I would say the risk reward is definitely not skewed in your favor. If you talk about scalping intraday on the short side, sure. But if you're talking about, holding shorts over a week out, I think that the risk reward is not tilted in your favor right now. All right. Same for SOXX and DRAM. We've got key supports coming up at 45.4 as well as 47.30 on DRAM. All right, so DRAM, SOXX, key ETFs to watch, put on your watch list together with the indices into the coming week. All right, as the semis go, so goes the market. All right, so just bear that in mind. Now, if we cover other areas within the AI space, AIPO, which is the infrastructure play, same story. All right. Every sort of large institution is looking at these ETFs. They are looking at, oh, wow, what a breakdown. Retails are all going to say this is a short. I know you guys, many of you guys have talked to a lot of you have said you don't short. That's a good idea in this scenario, because what I would say is a lot of guys who see this, especially newer retail traders, they love to short this. All right. And it could play out, but in terms of the risk of a short squeeze on the upside, it has grown very significantly. So I wouldn't be looking for a short position here. I would be looking at how to play the short squeeze on the long side, because I do think that the risk reward and the asymmetry of the trade is much better playing a long side short squeeze on some of these names, which are actually a little bit oversold, especially on the NASDAQ front. All right. Could it all come crashing down? Yes. All right. But again, if yields, all right, so watch the US 10-year yield, it will start coming off and breaking down, we will see the tech index really start to rally hard. All right. Regardless of the news in Iran. All right. Now let's go to FX. So FX, this is an example of how a head and shoulders pattern could get faked out and played out with regards to what we're looking for in the DRAM as well as the SOXX space. So if you guys look here at the 1-hour chart, all right, you can see here This is the left shoulder, right shoulder, sorry, the head, the right shoulder here, all right? And then you see the breakdown below the neckline, right? And you see how this tries to break down again and then gets faked out and makes a high above the right shoulder to validate the entire head and shoulders pattern. So anyone who was short the head and shoulders pattern would 100% be stopped out at this level here. All right, the level above the right shoulder down here, all right, this level here was kind of an indication for you to basically get out. And as you can see here now, there's maybe an inverse head and shoulders forming on euro dollar. Let's see, all right, into next week. Having said that, all right, what this could very well be a scenario that happens for both your SOXX as well as your DRAM, where, all right, in a similar fashion over the week, all right, you start to kind of see this happen and then spike up. And then, you know, from there, if let's say things don't resolve too well, then of course, maybe we hit lower, but it could consolidate sideways as well, all right, and go and tighten up like this, and then hit higher, all right? No one knows at this point in time, but again, euro dollar, this kind of head and shoulders fake out is something that you want to keep a watch out for to happen in the SOXX as well as the DRAM side, all right? Because if I'm an institution and I want to cause a lot of pain, not on purpose, but simply because I just want to buy it cheaper and I know that there's a huge demand still for memory chips as well as a lot of semiconductors, I would want to buy at much cheaper levels. Best play, get the market makers to create a head and shoulders pattern, drive it down below neckline, and then buy it up below the neckline, right? Because a lot of people are just going to be caught off sides for those who just look at pure technical patterns, all right? And again, not looking in the market in a broad context, which we have to do whenever we assess markets. Again, reminder, the NASDAQ is oversold on the 4-hourly, okay? So I wouldn't be overly bearish. The bears have had a lot of time to push this market down, and they haven't been able to do it. Okay, dollar yen. All right, we are seeing a sort of well, consolidation underneath this sort of like resistance line. I am still expecting one final push as this tightens up. All right, you call this a cup and handle pattern or what have you, you know. But you can see here, you know, if this is a cup and handle and then this pushes higher, it's not uncommon for FX to have very, very messy cup and handle patterns, unlike equities, which tend to have a cleaner cup and handle pattern, and then this pushes higher towards the target box. I am still hoping that we see a 163 plus to 164 level before some sort of intervention or something comes off. All right. Of course, what I'm implying here is that maybe we have some sort of a spike in yields or something for a little while and then thing comes off rapidly. So the ideal scenario for risk on is it spikes into the red box and then comes off quite hard after that. Dollar Swiss also consolidating very nicely. The cup and handle, as you can see, got faked out. All right, back below again, but still expecting a test of the 82 level for the dollar Swiss. Again, great carry trade currency. You harvest over 100 pips. All right, just sitting on this for 6 months. And very stable. Again, just a reminder, this is at a historical low. All right. Now, I'm going to move into the metals. All right. So I am hoping here that this is now officially a double bottom. All right. This is really gold's last chance to actually start to counter rally here and push up towards this 4380 level. All right. Unfortunately, this scenario, which we were hoping for, or I was hoping for, did not play out. I was hoping for this, where it would break out, test 4380, come back down, and push higher. It is increasingly looking like the scenario may be this is a A, B, we have a C, and then this continues lower again. All right. So it is beginning to look like, because of a lack of momentum to the upside that we may move up towards this 4,200 level here. All right, and then start to come off hard from here. All right, it is a very possible scenario. Unfortunately, gold has a lot of time to push higher, and it hasn't taken advantage of that time, or at least the bulls have not taken advantage of that. Silver, very similar scenario. In fact, silver making a lower low might be a first warning sign to you that this hopeful upside that we would have in gold is probably not going to happen. All right. It is very possible that we could have a B wave flat here. All right. And then this pushes up towards, you still have one more move higher towards here before coming off big. All right. But the move in silver is sort of firing a huge warning shot to everyone with regards to for those who are extremely bullish on precious metals. So at this stage, I would say I'll take a lot of caution with regards to being bullish on precious metals. You could trade it on the intraday, but if you trade on the intraday, again, I would zoom down to scenarios within the 1 hour time frame. All right, within the 1 hour time frame, I am still expecting, or the 15-minute time frame, I am still expecting this bounce to develop a little further, pushing towards the 4,100 level, like this. All right, into the open in Asia, pushing towards here before some sort of consolidation happens, and then which way it resolves remains to be seen. But I am still expecting at least for tomorrow's open, all right, into the New York Open, for gold to sort of rally towards the 4,100 level before consolidating again and then deciding where to go. Now, with regards to Bitcoin, this has been the only asset together with the other crypto coins that have been trading, and been moving on sort of the Iran news. So for those of you who aren't aware, there have been casualties on the US side as a result of the re-escalation of the Iranian conflict. Obviously, Iran has left the Islamabad peace accord discussions. So let's see what happens. All right, they said under no circumstances will they ever again negotiate with the US. All right, but on the other hand, when you play a card like that, okay, the important thing to bear in mind is that Iran will will essentially lose its leverage over time, okay, with regards to the Strait of Hormuz. All right, people are just going to find ways around it. It'll take time, but they will find ways around it. All right, but Bitcoin, bigger picture. All right, everyone was saying, oh, with the re-escalation, things are going to get really bad. But if you look at the bigger picture, all right, we have not had a really negative development. Again, we were looking for this inverse head and shoulders / cup and handle pattern to play out towards the 69,000, 70,000 level. All right, but you can see here, it's been hugging the neckline or the handle line. And as you can see, it's just gyrating back and forth. But into the open, into Asia, I would actually be continuing to look at long positions as a bias, all right, until this level here is broken, which is the 63,850 level. That level breaks, I would say, okay, probably we need to reassess any Bitcoin longs. But for now, at least Bitcoin remains bullish as long as this low and this low here, all right, found at the 62,450 level, is not broken. All right, in terms of Bitcoin. Now, in terms of ETH, much more bullish picture. All right, and that is reflected in the ETH BTC cross going higher. So we can see here that with regards to ETH, this has been consolidating tightly into the sideways. So this is a more bullish consolidation than say something that is more downward sloping like this. All right, so this is not really what you want to see for consolidation. This kind of like arch curl. It's got to look ideally something like this, as flat as possible. And you can see here maintaining as flat as possible, tightens up, and then we push higher. Having said that, for both ETH and Bitcoin, I am expecting a move higher and a breakout higher into the week, as long as for ETH, this 1830 level, 35 level doesn't break. And, if the risk off scenario isn't too severe, I am expecting both Bitcoin and ETH to actually try to find room to the upside. But bear in mind that trading can be very choppy. All right. But as you can see here, all right, there is a sort of bit of a double bottom breakout in ETH BTC. And we know that whenever the ETH BTC ratio starts to come up and starts to move higher, it tends to be bullish for crypto. All right. Just to see how far this has come from. All right. So there is a break of a much bigger downtrend line. If you guys can see here. All right. There may be a period, okay, like this is over a year. You can see there may be a period of extended outperformance of ETH over Bitcoin coming. All right. If you look here, there is a massive long-term trend line here that has been broken with regards to the ETH-BTC ratio. All right. And if this does actually play out and we have a massive outperformance of ETH over Bitcoin, the question is how high it could go. If we were to talk about distance, it could easily revisit this 0.0411 level, or even as high as the 0.05 level down here. All right, so this is really sort of the target box that we are looking at if this really plays out in full, okay? Which means that ETH would have a significant climb over Bitcoin. So one of the ways if you want to stay long crypto is to just trade the ETH-BTC ratio. If you have Bitcoin, trade it against ETH, and then whenever you get overbought conditions on ETH, sell it back to Bitcoin. All right, but into the open on Asia, although crypto is trading right now, I am expecting this to push up towards closer to the 0.03 level with regards to the ETH BTC cross. All right, so if you are in BTC and you want to buy the upside, do look for long positions in ETH BTC. Similar scenario for gold against silver. Although we were saying that gold may consolidate and then come off, but we have noted that silver has had a much weaker pattern relative to gold. So I am expecting a continued period of outperformance with regards to gold against silver. All right. And we can see here that we had a very nice consolidation that actually broke out with regards to the gold-silver ratio. All right. And this actually led to a period of significant outperformance of gold against silver. So really, I am expecting this to continue to outperform with in terms of the ratio. All right, at this point in time. So if you're trading relative value, this is another pair that you want to watch. All right. Now let's cover some of the other ETFs as well. So AIQ, this is the AI ETF, a very popular one. All right, into the open on Monday. All right, as long as this 57 level is not broken, I am looking for a retake of the 60 level. All right, to push towards the upside and test the 63 to 65 level in the near term. All right, this has fallen quite a bit, as you can see from the long-term chart. But having said that, all right, I am viewing this as another potential fake out of a head and shoulders pattern. This head and shoulders pattern has actually almost more or less completed as well. So we take the head down here. All right, this is an opportune scenario for actually the bulls, all right, to start taking control of this and faking out the bears by pushing this back above this level here. All right. back over the right shoulder at the 68 level thereabouts. So AIQ, something to keep on watch. But what's really been outperforming is the Chinese tech ETF. As you can see here, KWEB has had a great week, whilst the rest of the complexes, in terms of the tech complex, has had a horrible week. All right. So broader term, all right, we can see that there is a nice downtrend line that has been broken. All right, so there's a bit of a V shape in terms of this ETF. All right, just get this downtrend line drawn for you here. All right, so this is a huge downtrend line. So do expect Chinese tech, i.e. BABA, PDD, JD, and all, to start to really outperform in the coming weeks. All right, so KWEB definitely in play, definitely on watch. Don't neglect the KWEB ETF for these next few weeks. All right, this is definitely going to be in play. Mag 7, similar story. Outperformance last week. And we can see that from a broader scenario, this has really demonstrated resilience. All right, partly Apple has done so well. But if you look in terms of the overall Mag 7 ETF, this has held up extremely well relative to, I would say, the NASDAQ. All right, so again, watching the Mag 7s into next week will be key, together with KWEB. Do expect outperformance in these areas. Solar stocks are another area that are interesting because we have a potential triple bottom that is coming about here at the 52.92 level. So some of you trade stocks like Enphase, ENPH, all right, which is very heavily related to the solar sector. TAN is potentially seeing a triple bottom here. Do expect some sort of scenario where this starts to bounce off. All right, and we have a scenario where this starts to come off. Find some consolidation somewhere here. All right, right at the sort of like double bottom line you can see here. And then push higher after that. All right, so this is a very real scenario. So 10 is on watch. KWEB is on watch. I would say AIQ is on watch. And the Mag 7's on watch. All right, IGV. All right, this is consolidated very nicely, and there are enough waves in place. We were saying that, I was saying that on, I think Wednesday and last week, that I am expecting the IGV to again test the 101 level. So names in there like Palantir, ServiceNow, Oracle. I'm expecting them to all have a bounce and move higher. Oracle is significantly oversold. All right. So if we look at Oracle in terms of where it is, I'm expecting a bounce in Oracle towards the 155s, maybe the 160s. And I'm expecting it to be a fairly significant bounce in line with the IGV ETF. All right. Now, in terms of sectors that have been outperforming, XLF, in terms of the banks have had solid earnings. So do watch for moves into newer highs for the XLF scenario. All right, as well as the biotech ETFs. This has been consolidating quite a bit. Again, the 3X of the BioX ETF is LABU, LABU. All right, and it's not a Labubu rabbit. It is actually a 3X biotech ETF. So don't obviously trade Labu, assuming that you are buying the toy. All right. Now, with regards to KRE, this has also done very well together with the XLF. So do watch for continued outperformance, but very, very choppy trades. So whenever you see stuff that gives you a pattern like this, that's a little bit choppy, not very tight, this is probably a better scenario to sell options in than actually look for trades. What you want to see with regards to ETFs are things that are quite, sharp or quite tight in terms of the pattern that it is forming. So again, something like SOXX, all right, where we are starting to see things, SOXX, sorry. Yeah, something like this where it's starting to tighten out a little bit more. Really, you want something, you know, as tight as possible, uh, sort of a horizontal type look. Let me just see, for those of you who are a bit newer here, yeah, something like this. You want to see it tighten up further here. You want to see a tight range here for a bullish break higher. So we haven't quite gotten that yet for a number of the ETFs, but you do want to watch for that to happen. But 10 in particular, coming near a key support zone with regards to a triple bottom. And with regards to the K website, you had that tight consolidation. So expecting that to actually come in. But again, KRE, all right, XBI not quite demonstrating that behavior yet, still very wide and loose. All right. There is no tightness or sideways movement, right? So you can see the last time KRE really had a nice breakout, we had a very nice consolidation here. You can see how this tightened up before it started to break out. We don't have that yet. All right. So again, KRE, all right, we don't have any tight sort of like pattern here right now for us to really get excited and get behind. So again, whilst financials are outperforming, trading options on them might be a better idea unless you want to play the earnings on individual bank names. All right. And in terms of other sectors that are interesting to look at, so of course we have our RK ETF. This is extremely wide and loose with regards to RK. It has been trying to form a base, all right, for some time, but you can see how wide the base is. So there isn't any real confidence with regards to RK bottoming just yet, all right. So I would say it is nearing a support zone here, as you can see here. That might provide some sort of mean reversion opportunities, but it's not tight enough for anyone to get comfortable with at this point in time. And unfortunately, RK does carry a lot of unprofitable tech with regards to their holdings. So do be a little bit careful if you're trading on the RK side. All right. In terms of other ETFs, consumer discretionary. So this one has been consolidating for a while. So consumer discretionary or XLY is something you want to watch. You can see here, we are starting to have a tighten up scenario. And let's see if this actually breaks out. All right, so other than the ETFs that were mentioned earlier, XLY is another one you want to watch. Communication services includes names like Meta. All right, so no tightness yet in any of the consolidation, nothing seriously interesting at this point in time. All right, if we look at healthcare, all right, nothing really tight. You could argue that maybe this is a breakout here, but nothing that's super high conviction. I mean, you could argue there's a breakout here right now that's happening, but nothing that's super high conviction. Having said that, the bias for anything healthcare related in XLV is on the long side. All right. XLU or utilities. All right. The power sector has been a very interesting sector with regards to the AI constraints, regardless of whether the opinion is that Chinese, AI models are proving to be a lot cheaper to develop. And if President Xi actually gives, AI for free, power is still going to be a bottleneck. All right, with regards to the entire AI boom, there is a consolidation pattern. But if you are looking to trade some of the power sort of shortages with regards to the AI boom, grid is actually the better ETF to look at. All right. This has been coming off a bit as of late, but this is more closely related to anything related to the power sector. One of the reasons why this has come off big is because a big component of it is BE, all right, Bloom Energy, and we know BE has been hammered quite hard in recent weeks. But you can see here, it is starting to consolidate. What we want is for this to really start tightening up and then breaking out again. All right, so we are looking for a tightening up and then a breakout with regards to this overall grid ETF. As you can see here, all right, we have a tightening up scenario. So just want to see this consolidate a little bit more and then break out. All right, but anything with, if you're looking to play the power constraint, GRRD is the higher beta play with regards to some of the power names, and some of the key names with regards to the AI power play are Bloom Energy, BE, GEV, GE Vanovia, ETN, Eaton Corporation. These are names that are very, very closely related to the AI power boom. These are names that you want to watch if you're trying to play the AI power constraint. All right, individual names. There is a name that I am watching for a short squeeze next week, which is Clean Spark. All right, this has close to a 30% short interest. It is a former Bitcoin miner with clean energy that has been sort of like changing over a model towards a AI power play and neo cloud play. All right, so I'm watching into the start of the week some sort of like scenario where we sort of go sideways in the pre-market or start gapping out in the pre-market. What I'm looking for is some sort of maybe opening drive. I'll draw the scenario for you. I would be looking for maybe at the start of the week a little bit of a drive up, and then it just goes sideways here for day 2, and then day 3 we have that breakout. All right. So because of the amount of short interest on the stock, all right, I'm hoping that Monday at least this will be one of the names that maybe drives higher. I don't know if it will, but if it does, great. Then watch for Tuesday to sort of give a sideways pattern, and then for Wednesday to really start to see that liquidity short squeeze play out. All right, we have quite a number of nice plays with regards to liquidity short squeezes. Even last week, there was a name which I was trading quite heavily, ATAI. All right, this was a liquidity short squeeze that turned into an acquisition. And again, whenever we talk about patterns that go like this, so for me, I got in with an average cost around 552. All right, before the squeezed higher, got out around 840. But if you talk about CLSK, this is what I'm looking for, right? Some sort of like squeeze, then consolidation, and then squeeze higher. This is of course due to the news with regards to an acquisition, all right, by Eli Lilly. But yeah, this is something you sort of like want to see. Sometimes this may not even be an acquisition news. It can happen to just a liquidity short squeeze, and liquidity short squeezes go much higher. So ATAI would have actually shot up way more if it were not for the fact that Eli Lilly actually put a cap on the bid, which was 675, a share in cash plus 250 in CVR contingent value rights. All right, this stock would have easily squeezed into the 10s and the 12s and further if it were not for the fact that this was there was actually a live bid price with live pricing there that forced the stock to come off. This was a short squeeze setup that was really ready to rally, and actually there was talk about this stock squeezing into the 12s and 15s where people thought Eli Lilly would be bidding for ATAI. So the psychedelic sector, the psychedelic drug sector is right now in play. ATAI is the first. So really do watch, the psychedelic drug sector. This is becoming an area of interest for a lot of the companies right now after the GLP-1 sort of like boom which they had. All right, so Eli Lilly is the first. Let's watch for other, stocks like ATI for a bid, especially if they are in the psychedelic sector. I'll post some of them if I see them in the Veridium sort of market update chat. All right. So that I've covered some of the key things I'm watching next week, especially on the ETF and sector front. Any of you want to cover anything? Just put it in the chat. Any particular stock or market you guys want to cover, just put it in the chat, and then I will get to it. Yeah, put it in the chat. All right, but for me, the main stock I'm watching into next week, CLSK. And all right, let's have a look. All right, so this consists of some of the SMR names. I would say right now, because this is living so far under the... Okay, so this is living below the 200-day moving average. So 200-day moving average is at 135. It's very hard to get bullish this as long as it's living below the 200-day moving average. What I would be looking for is actually very similar to 10. So what I want to see is at some point this bottoms out, let's say somewhere here, and then it tests twice, 3 times, 2 to 3 times before breaking out. And what I want to see, so you can see right now, right, that the 9 is clearly below the 21 EMA here. All right, very, very clearly here. I want to see the 9 start to creep back above and the candlesticks actually getting above the 9 EMA, something like this. So this, if I were to put where I would have tried a mean reversion play before stopping out, it would have been here. All right. You can see the 9 starting to curl back up. And then you can see that the candles were above the 9. I would have tried a mean reversion for here and then a retake of the 200. But of course, this proved to be short-lived. You would have stopped out the low here at 129.50. But as for now, no reason to get bullish NLR yet, but worth watching for a sort of mean reversion play. All right, is there a screen to identify short squeeze stocks? Yes, you can do it by going to this website. So what you want to do daily is you want to find stuff that whatever name you have. All right. So I gave you guys a couple of names or a couple of ways, which is one is like look at Webull. Then what you want to go to Webull is just click on markets or just click on the screener, right? So I'll give you an example. So like this is the Benzinga screener. All right. And look for the top few names, all right, that are spiking higher. All right. Especially if they are small caps. But yes, CLSK, was one of them. And then what you want to do is really just start researching them, right? So you go into S dot, number 1. All right, go down here, look for the short float, 13.51%. Anything above 10% short float, all right, is a potential short squeeze candidate. And actually, S dot squeezed quite nicely into last week. And if you look at the bigger chart from Finviz, you can actually see that this is a potential short squeeze candidate as well. So this was already starting to set up into last week. S dot you should be watching into next week. VEE was another one. I know these names sound really exotic, but actually the names don't matter. all you really care about is whether there is a potential short squeeze in the making. This was another name that was squeezing higher, but there's no short squeeze scenario here. All right, because you've only got a short float of 1.47%. You just keep moving down the list. All right, you're looking for 10% and above to put on your watch list. What you really want to do is, as you put them on your watch list, right, then you want to, so literally you create a watch list in TradingView and you start putting all these names with high short floats down. You note them. All right, so this one doesn't really have a short squeeze scenario. Then you watch something like, say, GPRE. Let's see if this one has a short interest, right? Don't bother about finding out what they do. Not important, all right? All right, so this one is a short float of 19.72%. Now, very important, for those of you who have heard me talk about liquidity short squeezes again, you want to watch, all right? So this squeezed on Friday, okay? So expect Monday to be a little bit choppy, all right, for this, all right? And again, just by the way, FinViz has a short interest chart here. So very interesting to see how this actually looks, all right? So FinViz, note that, when it comes to things like GPRE, when it comes to anything that is short squeeze, watch for 10% to 15% and above in terms of short float. And then what have these on watch when they've spiked one day, watch for a sideways consolidation, and then watch for a day 3 move that starts to squeeze like this. Once it starts to squeeze like this and it starts to get above resistance and you see tension in the tape, you should start to see the thing potentially start to go. All right. And the perfect scenario is it starts to go and it starts to halt up. That means as it goes, it halts upwards. All right. So yes, that's how I would actually look at the liquidity short squeezes. All right. Cool. All right. Any other questions or any other markets you guys want to cover? All right. So actually, we spotted a couple of names here: S dot, GPRE for liquidity short squeezes, CLSK. But any other names that you guys want to cover, or any other questions you guys want to ask? Just feel free to put it in the chat. Anyone else? Or that's it for the day? All right. If there isn't any more questions that you guys want to ask about, it was great meeting. Okay, that was a request for SpaceX. All right. So let me see. All right. So SpaceX is living below the key 150 level. All right. Unfortunately, there is nothing to be bullish about with regards to SpaceX at this point in time. And it is leaving below the 9 EMA. These are not things you want to see. So until there's some sort of bounce, you'll be looking for short setups. And again, just a reminder that from the highs to the lows, all right, the average fall from the IPO high to low is about 65%. So if it follows the average IPO fall, we could get to 78, 50, or 80 on SpaceX potentially, right? Before we start to see a bottom. All right, so 55 to 65%. If it falls less, somewhere around 101 level, 100 level, yeah, we could start to see maybe this starts to bounce. All right, who knows? We'll see. But nothing bullish with regards to SpaceX right now. Baba. All right. This is consolidating nicely in line with KWeb. This is all news on the various AI models in China coming up. And Baba, as long as it can find support It keeps its support at this 114 level. All right. I am expecting this to sort of consolidate and tighten up sideways. So expecting a pattern that looks again something like this. All right. And then sort of tightens up sideways and then pushes higher after that. All right. So I'm kind of watching for that. It's a bit too loose now. I wouldn't engage in a long position in BABA. You could sell put options on it, but in terms of a spot position, I'd be a bit more careful about taking a spot position in BABA. Intraday though, if there is news, BABA is setting up quite nicely for opening drives into either Monday or Tuesday. So what to watch? Definitely a name you should keep on watch with regards to the trades into the next week. All right. All right. Any other sort of like names you guys want to cover, or we're done for the day? All right. If nothing else, all right. Thank you all for your time. We'll see you guys again on next week. We will do Thursday again. Wednesday, we have a logistical issue again. So Thursday, we will do the call uh, at 8 p.m. All right. So we'll send it out to you on Discord as well as Telegram. All right. But then after that, we will revert to your usual Wednesday schedule again. All right. Great. Awesome. Have a great trading week, guys. Don't be too quick to take your positions into the start of the week. Let the patterns come to you. All right. This is very tricky in terms of the market, but we are nearing oversold levels. All right. So don't be too eager to take positions at the start of the week. All right. So with that, all right. Thank you guys. Have a great week ahead. All right.